Hello, YouTube. Welcome back to the Wealth Catchers channel. Definitely happy to have you guys back, and definitely happy to be back as well. So, as you guys know, has been a pretty exciting past couple weeks in the market. As you know, just all-time high after all-time high across the board. So, definitely been nice to see our portfolios all on the green, and just definitely, yeah, it's just been a great experience. Obviously, the highs don't last forever, so you gotta be grounded in that approach, but definitely enjoy it while it's going on. Right, things will eventually come back down to reality, but this is what we invest for, right? So go through the rough times, go through the turmoil, the down markets or the down periods, deploy your capital, quality names, quality assets, accumulate, and then it's gonna rise back up, right? So for today, we're gonna go touch on some of the touch on the major indices, right? So, the SPY, Dow Jones, the Qs, and the Russell 2000, because obviously everything's hitting all-time highs. Go look at the charts for those, and then some charts on some ticker symbols that have definitely been making a lot of news in the market, and that's been top of mind for me recently. And also a new ETF that's come out, it's been out for a couple trading sessions, and also another ETF that's near and dear to my heart. So without further ado, let's go ahead and tap into it. So first, we're going to start off with looking at the fear and greed index. So fear and greed currently at 68. Obviously, we're in greed. Then you can see a month ago we were in fear, right? So definitely showing you how quickly things have changed in that 4 to 6 week time span. And then we go further down. Remember that market momentum indicator for S&P 500 versus its 125-day moving average. That is now signaling extreme greed. So remember, we got right around here. We're like, that's a good opportunity to look at. Then obviously we tanked even further to down here. So we all know around March 27th, March 30th was kind of really the bottom of all the things that have been going on with the Iran war, issues with oil, gas, all that type of stuff. So pretty much bottomed out here, and then now the market has gone to all-time highs repeatedly, right? We have multiple sessions of all-time highs, and we still have that issue lingering in the background, right? So again, it's like yesterday's news. The market is forward-looking on to the next thing, but it's still stuff that we have to be aware about, right? So that going on with the Strait of Hormuz, more geopolitical tension. We have midterms later this year. New Fed chairs coming in. So it's not fear mongering. It's just things to keep in mind. Same thing with CPI, how that came out, and also with the Fed rate wasn't changed. Still staying the same. There was no cut. There was no hike. So it's the same thing. Rates higher for longer. So all those things do have an impact in somewhat. It could be in pockets, or it could be things that's going to unravel over time. But in the midst of all this euphoria and all that, still, it's nice to look at your portfolio, see it in the green. But again, being a long-term investor, just make sure you keep in mind of what kind of market you're in and what's going on, right? Especially if you're investing kind of how I like to invest and how I kind of preach on this channel, when you're looking for discounts, when you're waiting for opportunities, while you're still investing. You can still be dollar cost averaging, but still, waiting for opportune times on pullbacks, things like that, to deploy some more capital into quality names and assets that you like, right, at a better price. So that is how the market sentiment is right now at the moment. We're in a greed market. Definitely did a 180 versus a month ago. So let's go ahead and look at the indexes. So we'll start off with SPY. And then you're going to see here on these charts that I do go through here, I'm going to have it right around here, have it circled out. Pretty much the key moment of when they hit these moving averages, right? Because, I'm a big supporter of using moving averages as opportunities to gain position or to enter into a stock or ETF that you like. So we can see here right around the bottom of this whole situation. So that was around March 30th, March 27th. You can see that we hit that 253 moving average on the daily chart for a SPY. You're going to see the same thing in the Qs. You're going to see the same thing in the Dow Jones, the small caps, and other stocks and ETFs that they hit key moving averages, right? Obviously, some broke below the 400, things like that, but right now we're talking about the major indexes. So we see SPY hit here, and then after that, it was like, the race was on. Everything just running up here, and then right around here, we started hitting a new high, did a new high, did a new high. Went stagnant, new high, new high, new high, new high. And then today, obviously, another new high. So again, when we get into the situations when the market starts hitting a new high, it happens multiple times in succession, right? So definitely, it's not going to keep on happening. It's going to eventually stall out, become stagnant, consolidate, things of that nature. Some news might come out, some events going to come out. It's going to cause it to pull back to a moving average. That's your opportunity to go ahead and scale in. Now, it could be a higher price than the last time it fell to that moving average. But the thing is, with these moving averages, they're dynamic. So they move with price, right? So you can look at a moving average this month. It's not going to be the same as next month or the month prior. So just something to keep in mind. Falling to that moving average is a very good way to go ahead and look at your opportunities for that. So that's SPY, and obviously too, RSI, we see it's oversold. Overbought. That's another indicator letting you know that the market's really hot right now, and there's a lot of greed behind that name. So let's go dive into the Dow Jones. Same thing for the Dow Jones. Its key moment also was the 253-day moving average for its bottom. Same thing, rose up. That has not hit an all-time high yet since that bottom. It's pretty close to it though. All-time high was 505. It's at 499.05 right now, so it's approaching there. Then we go to the Qs. Qs do have a new all-time high that was hit today for it. Same story. Hit the 253-day moving average. Bounced off of that. Went all the way up. New all-time high. And the thing is, for the 253, I'm not sure if it's publicized anywhere or if anyone really talks about it. Again, that's something that you just take the number of days in a trading year. The average number is 253 days. So that's a trading year's worth of data I like to move off of. So obviously your big numbers usually here are your 50, your 72, your 100, 200. And then sometimes your 400, but I like the 253 as well. So sometimes some moving averages, they may be new to some people. Sometimes it's just buried information people don't know about. But it kind of helps you. It probably gives you an edge, I would say, right? Because as you can see on multiple charts so far, they have recovered at that level, right? So that's the Qs. And again, same thing, RSI is overbought. Definitely hot right now. And then we're just quickly going through on the daily charts for it. And also, too, I don't want to keep you guys here for too long. Especially, I got some tickers to go over. Just want to show opportunities and what we should pay attention to. Because, again, the story is going to repeat, right? Because a lot of people are probably seeing their portfolio, hey, I should have bought more. That's always going to be the thing you're going to say. And then someone who didn't buy any, you probably going to beat yourself up. Oh, why didn't I buy? The thing is, there's always going to be opportunity to buy, right? It's about what to look for and what to understand and what you should be preparing yourself for. So again, everyone has their methodology. Everyone's going to have their way how they go about it. This is just my framework, how I like to follow it. Same thing, as I always say, key moving averages. And then if you want to throw in there and you can layer in their percentages, right? And I'm going to show you why percentages are important as well when we go into some of the other names later on. When we're talking about your 10% discount, your 20% discount, things of that nature for you to scale into a name that you like. So IWM, this is our small cap stock ETF for the Russell 2000. Obviously, now that we see that they hit a new all-time high too, definitely, because before it kind of was like a narrow rally. Now we can see this rally is kind of broadening out for the most part. When you see small cap names are getting up there, Dow Jones a couple sessions ago or a week or two ago hit a new all-time high. S&P 500 is hitting a new all-time high. And yeah, there are some leaders who aren't, moving greatly to the upside. Stuff like Meta, names like Microsoft. I looked at my son's position for Microsoft. He's still flat since we entered that position, I think 2024-ish. I think we entered it. And it was still flat on that position for the most part. And yeah, we add to it, but it definitely has not been moving. But eventually it's obviously gonna keep moving to the upside. It's a great company. But that's just an example of some names in the Mag 7 aren't moving as greatly or as strongly as we expect. So this is the Russell 2000. So we just broke through all those major indexes. And then for some price points, we could go over for IWM. I'm not sure if anyone's really interested in that, but for that 248.99 was a 200 moving average. So we see it respected that last time, bounced off of it, and this is on the daily chart. And then we can circle back around for SPY to give the 253. 253, that number is 657.29. Then let's go to the Qs. For the Qs, that number for the 253-day moving average is 590.13. So $590.13. And then Dow Jones, do not like it, but if you are someone that's in that boat, $463.85 for the 253-day moving average. So obviously, if you've been on this channel for a while, and also if you went through my articles on the page before, I've shared it on my website. I like the 100, 200, 253, 400. Have my reasons for each. Those are the key levels I like. I do put the 72 and 50 on here because sometimes when you go on the weekly chart, touching the 50 is sometimes a great opportunity as well. So I can show you for like SPY. You'll see on the weekly chart, that also shows you a great opportunity, to get a great asset at a discount, right? So you can see here for SPY, the opportunity was right at the 72, or even when it started touching the 50. If you're able to deal with this 14 days of whiplash here, or you zoom out on the weekly, it's way smoother. Opportunity was there, and then as you see, straight to a new high, all-time high. So those are just some methods how I like to approach it. For the moving average, now we're gonna go to some individual names that I know that you guys are definitely well aware of. And this is obviously the new, the new face of the AI wave and everything. People have been talking about it for quite a while, but this year and the past year especially has been going insane. And that's memory. So obviously we got our household names. We got Micron. Excuse me. We got Micron, and obviously we're going to touch into the next name, SanDisk. So we're looking at Micron now. And the reason why I put Micron on here, especially, let me zoom back out real quick, was it's a name that moves greatly, right? It moves in chunks. Like Micron could move $50 to $100 in a session. It's crazy how much this stock could move, right? And then it's going to be the same thing with SanDisk. So it had opportunity here from the daily if you was paying attention. So right around that same window, right? March 27th, March 30th, it hit this key moving average of 100, right? Of the 100-day moving average. Great opportunity for you to got that name. You could have got it around the $300 range, right? So from 362 to 318, or you could have got it from 311 to 337 on those two trading sessions, right? Let's say you missed that. You didn't even get it there. You got it at the 72-day moving average, which is a little further up. That range was from 350 to 374. Before that, if you got it right when it was hovering above the 72, that range is 371 to 388. All great opportunities, right? Because again, hitting key moving averages. And it's not always to say that's going to bounce off of that moving average. It's always going to hit that moving average and go back up. Obviously, you see it here at the 50. It broke past it, didn't recover. Got to the 72, broke past it, didn't recover. These are just opportunities for you to go ahead, start nibbling, go ahead, start building shares into our fractional shares, whatever it is. You got $100 to put into the name, $50, $20, whatever the case may be. But it's opportunities for you to start slowly building into it, because now it's at a great opportunity and a great deal. And again, the person who took advantage of buying at these moving averages, and let's say you were someone who was, on top of it. You wait for that 100-day moving average, you hit it, you got into the 300s, and now you're at 667 now at an all-time high, right? So you legit doubled your investment from March 27th to now, what is it, May 7th. So in about 6 weeks, you got 100% return. Again, that's not going to be same for everything, right? For every stock, for every ETF out there under the sun. No. Obviously, there are certain names that are moving great. Bloom Energy, again, Micron, SanDisk. These are names that are moving in trunks. Lumentum. So, but again, these are the type of names where you could use the moving average. And then I'm going to definitely, again, I'm not a financial advisor. I'm not a personal financial advisor, all that type of stuff, fiduciary, all those type of things. I'm not that. I'm just a regular person that loves to talk about the market. I invest a lot for my son, and I'm quite passionate about this. And it's something like, it's a hobby of mine I just do in my free time, and I just love it so much. But speaking from a perspective of, now you see Micron's at an all-time high, right? 667. You're going to think to yourself, probably, for it to fall to the 50, that's 437. Even to the 100, that's 394, right? You're going to put in your head, oh, it's probably not going to be a drop that's going to happen, yada, yada, yada. I don't see that happening, this, that, and the third. This is why I also recommend 10%, 20% drops, right? So a 10% drop on this is dropping to $600. That's considered a correction in a stock, right? Same when the market drops 10%, that's considered a correction in the market. Drops 20%, we call that a bear market, quote unquote, for it. But we've seen names before in the past move 20%. We've seen Tesla drop 20%. Did you sell? Obviously, I hope you didn't, but you wouldn't sell your position for that. You're looking at it as a 20% discount. Same thing. This name right here falls 20%, right? That's going to be at 533. Yeah, it's not at this moving average of 394, but getting that 533 when it was at 667, that's a 20% discount. That's a good opportunity for you to go ahead, buy that name. So that's when you also apply that to it as well, right? Use moving averages, but also apply 10% off, 20% off, however your percent, whatever you consider a deal. I like 10% because it's just following market metrics. That's correction. 20%, that equals bear market. Also, try to understand why it fell, but in names where you know that they're quality and there's a story that hasn't changed for it, right? Obviously, we know the memory story. It's not going to change until it gets solved and figured out, right? So memory is going to be a need. Only way the story really is going to change is if the quote unquote AI bubble pops. For some reason, they stop building data centers, and for some reason, chips stop getting created and all that stuff, and I don't know what we're going to revert back to, because something like memory has always been needed in devices and in technology. It's just this boom of AI and also the need and thirst of memory for AI is what's leading all this, right? For stuff like Micron, for stuff like SanDisk. So that's MU, that's Micron on there, and how to approach it. If you're someone that's, again, I don't believe in chasing. If you are itching to try to get into this, at least do a 10% drop, right? And it's going to offer that to you because, again, it moves in chunks. Same way it moves up in chunks, it's going to move down in chunks as well. So, and also, I just wanted to show on the chart too, while I circled that out, to show you that it has offered opportunities. Even if you look back here at the 50s, it's offered you the opportunity to go ahead and get in there, right? So for you to be like, oh, I missed it or this and that, the train's going to come back around. And if you can't wait for a moving average, do the 10%, 20% discount. So look at SanDisk, another name, doing amazing. It's like almost unheard of. And their discount was catching it at the 50. So it's around the same date period when everything bottomed out for the Iran war fiasco and everything. So same date period, right? Same date range. March 26th to the 30th, that range right there. You could have got it around the $600 range and the high 500s or mid 500s, so 558 to about 580, and then to around the 600s to the mid 600s. So basically, let's say $600. You could have got this name at 600, right? And now it's at 1439. So you would have more than the same thing, more than doubled. So 100% return plus in a matter of weeks off of just using the moving average. So again, that's why I keep preaching it, because it's just a simple tool, simple indicator that we all have access to. You can throw it on your Robinhood. You can throw it on, this is Thinkorswim that I use. You can throw it on, usually whatever brokerage you have, they sometimes have a charting system in there. You can throw it on there. If you don't have a brokerage that has a charting system, you can go to Yahoo Finance. You can go to, Trading View, and use the indicators there, and then just map it out for yourself every week or every month, how I do on the watch list. That's why I do on the watch list every month. Write the moving average down for that month that I'm going to be tracking and following and paying attention to. Do that. And again, this is another name. Apply the 10%, 20% rule to this name as well. So for this, 1439, 10% drop in there is at 1295. Opportunity for you to scale in, right? 1439 minus 20%, 1151. So basically from $1,100 to $1,200, opportunity for you to scale into this name. 10 to 20% drop right there. 10% correction, 20% bear market. Obviously, it drops 20%. We're not going to say it's a bear market. It's going to be like, we just know that this is a high quality name right now. And eventually, yes, reality is going to settle and eventually things are going to slow down. So that's why you approach it systematically. You don't, again, someone bought here at 1439. I'm always going to say this pretty much every video. You don't want to be the person who bought up here at the top. And then, yes, this could probably double again by the end of the year. The person who bought up here is going to be happy. But again, you want to be the person that tries to take advantage of discounts, of opportunities. Your discount being moving averages or percentage-based discounts. And you win some, you lose some. Me, I'm not in SanDisk. My son and I ain't buying me in SanDisk. I look at it all the time like, dang, that's crazy. It's running. But I'm not beating myself up because I also look at his portfolio and I'm like, he is so close to closing in on 10K before turning the age of 4. And I'm just like, I'm happy with that as well. So you win some, you lose some. There's thousands of stocks out there that you could miss out on, that you can still turn around and go to your basket of companies and still make great money off of it, right? There's always going to be run. There's always going to be something you miss out on. But for things that are grabbing your attention that you do want to be a part of, please don't chase. Go about it systematically. Have a plan how you're going to scale into it and how you're going to allocate capital to it. So, going to go ahead to one last ticker over here. And then I'm going to close out with the two ETFs that I wanted to recommend to y'all that I've been hearing a lot about. And also, like I said, one is near and dear to my heart. How to touch on, so we're talking about AI for the memory part, how to touch on the infrastructure part as well. So Caterpillar, as we know, we added Caterpillar to the watch list at the beginning of this year. It's been moving like a monster. It's also something, very slow, very boring in terms of the type of company it is, right? They provide equipment for construction. Pretty plain and simple, black and white. But the thing is, they're so pivotal of a company that's needed in this whole cycle that's going on for building these data centers out and getting the buildings up, infrastructure up, and all those things. So new all-time high obviously reached here, and just wanted to show how it also offered its opportunities, especially throughout that whole month of March, right? So pretty much hugged the 50-day moving average the whole time, touched the 72 a couple times. Then after that, gapped up, went on a run, gapped up again, another run, right? So yeah, definitely overbought on the name, but it's another name too that is AI influence that you can go ahead and tap into, that you don't need to buy, Nvidia, AMD. They're obviously doing great, right? Nvidia finally woke up, started, actually acting right. But again, this is to show you that how Jensen talked about that 5-layer cake. There are multiple ways to go ahead and benefit from what's going on in the market, things of that nature, whether it's buying the major indexes or the indices that you've seen, everything's hitting all-time highs, whether it's buying those quality individual names. It's all about educating yourself. It's all about understanding the environment that you're in and what situation you're in for the market, right? So again, to close out, touched on those. I'm going to go ahead and look at two ETFs. So this ETF is from, you probably definitely heard about it. It's been out for a couple sessions, but I think it's like a week old now, or maybe 2 weeks old now. But DRAM or DRAM, however you want to call it. So that's a memory ETF from Roundhill Investments. So I wanted to pop that up. Big thing about this ETF is it's strictly focused on memory, right? This is what the highlight of the video pretty much was talking about, Micron and SanDisk. But it's also other memory players that for the US market, usually we don't have access to in terms of buying their stocks. So stuff like Samsung over here, SK Hynix. So we can't buy them in the regular market. Also, they call them ADRs. So like how we can buy Alibaba, even though they're in another country, we don't have their how can I say it, their representative type shares over here to buy. So Samsung is not something we could trade over here in the U.S. market, and SK Hynix, but they're very great pivotal players in the memory space. So I do like this ETF. Only thing I don't like about it is the fee. So it's 0.65% expense ratio. So in the world of fees, that's pretty expensive, right? So usually you're going to see stuff like with Vanguard, their expense ratio is like 0.03%. Even some of the spider funds, I think they're less than 0.10%. It's only 0.65%. Pretty expensive, right? But you have to kind of weigh that out for yourself to see everything you're getting exposed to, right? A lot of great memory names that you wouldn't get exposed to either way, otherwise, unless through that ETF, right? So we're going to look at the holdings. So we can see here, top 3 holdings, definitely big on SK Hynix, they're definitely big on Micron, and they're definitely big on Samsung, right? So we see each of them have an over 20% allocation. SanDisk, they're kind of light on 5%. Seagate, this you can actually buy on the stock market, the US market, STX, but they are a foreign company. And again, I kind of have my personal feelings towards investing in foreign markets because the regulations, things of that nature, stuff like that. I feel like if you are going to get foreign exposure, do it through an ETF for the most part. Don't buy, like I wouldn't buy. This is me personally. I wouldn't buy STX outright. I'll get exposure to it like this through an ETF, right? Same thing, buying Alibaba outright. Probably wouldn't do that. So there's ETFs for different countries. Like there's a German ETF. There's ETF for China. There's ETF for Japan. So there's ETF for Brazil. So if you're someone that does want international exposure, but definitely want to narrow it down to a certain country, you could do that as well. Or you could also do something like VXUS, which is Vanguard's equivalent of international exposure, excluding the US, right? So it's not going to be bottled in with the US, right? So it's a fully emerging market type ETF for the rest of the world that's not going to include the US in it. But yeah, DRAM, obviously you can see here, a lot of great names in here. And also too, you could go ahead and throw the method of cracking open the ETF, seeing the top names in here. Hey, Micron, I could buy that. SanDisk, I could buy that. If you want to do the whole STX thing, buy it separately, you can. And then Western Digital, that's a stock that's traded here on the US market. So if you don't want to pay this fee, excuse me, of 0.65%, you could go ahead, pick out these 1, 2, 3, 4 names here, kind of build your own mini ETF if you want to do that, right? So there's that. So definitely want to put that on your radar. This is DRAM, the memory ETF, or DRAM, however you want to call it, from Roundhill. Something to look at. And then I'm going to close it off with near and dear to my heart, SMH. This is probably my favorite ETF of all time right here, and it's been beautiful. So they have, yeah, they're just amazing. As you can see, year to date up 52%. Been around since 2011. This is obviously the current share price of it, and the expense ratio on the heavier side, 0.35%. But again, I feel like it's definitely worth it. We can go look at the holding. So this is your semiconductor ETF, right? So I'm definitely a big proponent of it because I feel like we need semiconductors for everything. And then you definitely see the top 10. You got NVIDIA, TSM, we know how important they are, Broadcom, Intel, AMD, Micron. See, they even have a memory exposure here. Small, 5.87%, but you still have the exposure of the memory, right? So like for my son's portfolio, I think this is probably the third biggest position in his portfolio, third or fourth biggest position. Obviously, mainly off of straight growth because I think we're up over 100% in that position for him. But even without him having Micron, SanDisk, and things of that nature, he still has memory exposure just because this is inside the ETF. So that's why I'm still okay him not having those other stocks in the portfolio, but he has exposure to it through this ETF. Texas Instruments, Analog Devices, Lam Research, Qualcomm. So again, great ETF to look at. We're gonna go ahead and look at the fact sheet real quick. Let that load up, and then I wanted to share with you. And KLAC. I don't even know about the ticker symbol, but it's weird for me to look at the name. But this is also the last rounding out the top 10 for it. But average annual returns, right? So we can see here when we look at life. So since its inception in December of 2011, it's been averaging 29% return. That's freaking insane. A 29% return on average per year for, was that 15 years? That's insane. Just man, it's crazy, bro. But yeah, just being able to have that in over the past 10 years is obviously even more crazy, 35%, right? But as you obviously see, as we get shorter and shorter. Past 3 years, it's really been cooking. 60%. Past year, 140%. So, and obviously this perspective, I mean, this fact sheet came out because it says 40.70% here year to date. Obviously, live, we've seen it over here. We're at 52% return. So this is actually, all these numbers are actually going to be bumped up a little bit when they come up with the update. Because we see here, this is at the end of April 30th. But again, big reason why SMH is, loved by me, hopefully loved by others. And I feel like this is definitely one of the ETFs that has to be in the portfolio. I feel like hands down, if you have to bet on something, you got only two ETFs to choose from. You got to go S&P 500 type ETF, and then I feel like SMH. I feel like those two are like a match made in heaven. You got those, and you're good to go. So definitely going to close out with that. Also, we'll finish this up with you guys. Don't forget to go to the website, thewealthcatchers.com. Catch up on any content over there. Obviously, this video is going to be uploaded to YouTube. Also, on the site, you can also go on there for videos. It's going to obviously take you back to the YouTube. But on here, I have blogs. I have market news that's kind of updated by CNBC, things of that nature. I do have a blog. I do have my insights here, kind of wrapping up the end of the week, what happened, recaps, investing resources here. I got tools, got the stock score up here, has some free trials you can try on there up to a certain point, but takes into account my methodology about how I view and grade stocks, kind of puts it into a system, gives the stock a score. And also got the stock research tool shown down here before. You type in a ticker symbol, it's going to give you a SWOT analysis. It's going to give you our take on it. It's also going to give you the list of competitors. And it's also going to list out all the entry points for it. So again, how I talk about my moving averages that I like to use. And it's also going to display to you, 52-week high, how much it's up, yada, 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 all that good stuff. But the main thing is definitely that SWOT analysis, breakdown, strengths, weaknesses, opportunities, and threats. And then giving you that rating on it. So let me go ahead and show you real quick. So for example, type in Microsoft. It's going to run all these things back here. So obviously, show you the 52-week high. It's 25% off of that. Obviously, great deal, right? Great deal opportunity. This is the year-to-date return, 5-year return. And then obviously it's showing you here moving averages and showing you green is like, hey, you're good to go. Good opportunity for you to probably try to go ahead and enter in this position. So again, daily is something that we're looking at more so on the short term. Again, you love the moving averages on the weekly chart, right? They're usually stronger and better opportunities for you to go ahead into. So the fact that it's about 6% below the 100-day moving average, that's definitely a good thing. Especially all these are pretty much green. This lets you know, hey, this is a good buying opportunity. And again, as I mentioned before earlier, we're pretty much flat on Microsoft for the past year, 2 years that me and my son have gotten positions in it. So pretty much flat on it. And then got your stock analysis. Obviously, it's going to say buy, hold, or sell, depending on what stock you put in here. Gives you a quick breakdown of the company, what's going on with the valuation, financial health, technical position, analyst sentiment, macro, key risk, the bull bear case. Then we go to our SWOT. Again, strengths, weaknesses, opportunities, threats, and then at the bottom it's going to give you a nice little wealth catcher take. So a nice summary of everything and also what we're looking at and how to approach it if we were to go ahead and try to get into that position or into that name. List the competitors. Again, I still recommend always doing your own research, right? This is just a tool to add to your tool belt, but I'd like to, if you were to come to the site, try to have everything as in-house as possible for you, right? If you have anything you want to look up, go over things of that nature. So I definitely wanted to try to make this as friendly and as useful as possible versus just coming to the site, reading the article, and leaving. Right? If you're on here, definitely try to give you as much value as possible for free. So again, up here, it's gonna pull competitors, and then also just kind of like light a light bulb while you're looking at Microsoft. You'd be like, oh, Oracle's a competitor, IBM, Google, Amazon, or it might show a company you never heard of, and you like want to go tap into them. So, but yeah, we have the financials over here: revenue growth, gross margins, operating margins, all those type of things to break down the financials of a company and their financial health. So that's the tool there for the stock research. And then obviously we got the calculators. I do have a shop tab. Anything you want interested in, these are obviously paid stuff. So things for growing a custodial account, because obviously it's something I'm done and I am currently doing for my kid. He's closing in on $10,000. So my strategy, how I approach it, going beginner starter kit, going from your first from $0 to your first $1,000 invested. So definitely some people don't want to sit through a video. Some people don't want to go back and forth with the AI, because obviously we know a lot of this stuff you can go ahead and read on your own, do the research, but a lot of people just want something quick and easy, want to pay a fee for it to go ahead and get it quick, easy, digestible, and it's right on their computer, right on their tablet, whatever the case may be. And then obviously a little more advanced topic here, structuring out your portfolio, right? I do have videos on this on YouTube as well about structuring the portfolio. Obviously, you go through my catalog, you're going to see I have some 50-minute videos, 30-minute videos here and there, but definitely as well rounded as possible as it could be, trying to definitely offer that to you guys. So do appreciate you guys checking in. It was great hopping back on here talking to you all. And again, stay invested, stay on top of everything. When the market does become stagnant, which it will, and eventually it's going to go down again, don't let it shake you out your position. The cycle just going to keep repeating itself. Just stay on top of it. Wait for your opportunities. Keep allocating capital. Wait for discounts. Deploy and enjoy the ride. So, have a great day, great night, great morning, whatever time you're watching this. And definitely see y'all next time. Appreciate it. Peace.